Hello, ladies and gentlemen. How's everybody doing? Good? Good? Thank you, one person. What about everybody else? Good. Okay, well, first of all, I'd like to kick off by saying a couple of things that are particularly important. We are here today because, let me read that, we are learning from FinTech how mistakes provoke a change. That's what's going on. You have like a bit of an echo following me. Yeah, there you go. It's gonna be nice. I hope you can still understand me. Good, there you go. It's gone now. Cool. So, as I said, that's what it says here. Learning from FinTech, how mistakes provoke a change. But I think in reality, what we're doing here today is, to a very large extent, we are celebrating maturity, right? Because being able to talk about your mistakes publicly, acknowledge them, learn from them, share them with everybody else, and get hardball questions from people, I think is what matters the most, right? So today is exactly what we are going to do. We are going to talk about failures in FinTech. We have a couple of very courageous senior managers or CEOs from FinTech companies that are going to share with us their failure story, and hopefully also get an engagement from the audience with all kinds of questions about how they learned from the failure, what changes did the failure lead to, and what kind of decisions have been made subsequently as part of that failure. So, ladies and gentlemen, I don't know whether you know this, but this conference is actually being live streamed on YouTube, and actually only the stage is visible. So the rest of you are not, so you can do whatever you like, okay? But before we do, I do want to prove to people watching at home that there are actually people here. So on the count of 3, I'm going to ask everyone to say a warm hello together, okay? 1, 2, 3. There you go. People watching, you can now probably tell that I couldn't have faked this in any way. There are actually people here, and we're really, it's a really big pleasure to have them. And without further ado, I will introduce our first speaker. Ladies and gentlemen, please welcome CEO at Pervesk, advisor at Bankera, Darius Kulikauskas.
Thank you. Is this on? Yeah. So, glad to be here. Of course, being the first speaker on such an event, I immediately assume that we must have messed up real bad. But as you will see, things are not black and white in this area, and of course, mistakes do happen, and it's better not to dwell on them too much, but actually try to pick yourself back up and try to fix and remedy things. So let me just firstly introduce our company, because we are not a consumer-centric brand. We are developing, as you can see on the slide, a financial services engine that can be employed by so-called white label operators. So we might not be a very known brand to like an average consumer, and probably only industry insiders know us. So we've been around for almost 4 years now as a company, but as a financial institution, we've been operating since 2017. And the thing that I'm going to talk about today happened in spring 2018, and that is an on-site inspection by our supervisor, Bank of Lithuania. So, just to give you some context, Pervesk as a company started with only a few customers, which were mostly associated with shareholders. This was done with the sole intention of testing the services, seeing if the processes are smooth, how the transactions are operating, and we did that, or so we thought, according to the law, but that was, as you will see, not an opinion of our supervisor. In terms of communicating with the Bank of Lithuania, we kept it strictly professional. In a sense that we did not engage in any informal talks. We've exchanged our documents and provided information only via official channels, and that might have been one of the first mistakes that we did. We only provided what was strictly necessary without any additional explanation and context to our customers and processes that we were developing. Okay, it's back on. So, as I've already mentioned, the on-site inspection happened in 2018, late spring, and back at the time, we've been operating for less than a year. So we were really a newcomer in that sense. We were a company in its infancy. The staff was small at the time. Of course, it was corresponding the amount of customers we had at the time, so also the customer base was also not that big. And when the inspection started, it was actually my second week on the job. I joined the company not as a CEO, but as a legal counsel. I was still learning and trying to find out how the processes work there. And I joined the company by leaving Lietuvos Bankas, the supervisor. So it was actually quite some experience to, after a week's break, to see your former colleagues from the other side. And I can still remember the general feeling that was floating around in the company. Everyone was thinking, okay, let's seize the moment, let's use this opportunity to improve our processes and use this moment to actually make sure and get yourself this confidence that your processes are very good, are basically approved by the central bank, because you've underwent inspection, and the central bank was always communicating that they are the partner of an industry. So we were very confident that a very sincere and friendly communication with them will only benefit us. However, it seems that they mean business when they do on-site inspections, and they don't act as consultants that much. So in a way, this acted against us, because we were very transparent. We were not consulting any lawyers at the time. We were providing documents as is, without any proofreading by legal guys. Of course, I was a legal person and still am, but I was not that familiar with the company at the time, so I was not really much of a help back then. So this resulted in fines that totaled 1.2 million euros for a company that was operating for less than a year. And of course, just strictly based on this amount, you would assume that we've done something really bad. You can assume that, based on these fines, it was not like deficiencies in the processes. It was not something lacking, but actually some money laundering going on, or something similar. Well, even to this day, we have not found any instances of actual money laundering happening, and this is not a surprise to us, because as I've mentioned, all of the customers at the time were associated with the company, so basically a sister company of Pervesk, or a parent company of Pervesk, and all of these transactions, even if they were quite large in volumes, they were of a very well-known origin to us. In addition to these fines, Pervesk has been restricted to provide services to the highest risk customers, and as you can tell, for a payment service providers, this is bad news. It's no secret that larger industry players compete for lower risk customers, and lower risk customers firstly turn to them. and then only higher risk customers or those customers that face difficulties opening accounts in conventional institutions, they turn to PSPs. So this was almost a death sentence to a very young company, but we were determined not to give up. And as you can tell, I'm still standing here, so the company is alive and kicking, and probably we've done something good in the process that we managed to get out of such a situation. It's, of course, it's no secret to us that quite a lot of people were not expecting us to actually continue operating after this. So it took us a bit more than a year since the inspection started to actually receive this message from the central bank that, okay, we believe that you have remedied all the deficiencies and all the sanctions and restrictions on your license are lifted. Of course, the actual things that have been done were done a bit earlier, but of course, Bank of Lithuania, they are busy people. They have to supervise a lot of industry players. So once we've submitted documents to them, it took us some time to actually receive this, let's say, conclusion. Of course, as you've seen, the fine, 1.2 million euros, well, it's a large sum of money, and you will inevitably dispute that in court, and we did that. And in the previous summer, so of course it's 2020 now, the administrative court lifted all the sanctions imposed on Pervesk, and as it stands, of course, the legal dispute is not over. Bank of Lithuania, of course, does not agree with that. They have appealed the court decision, so the legal dispute is still ongoing. But as it stands, I think this shows that there's quite a bit more to this story, and you know, the first impression that you get from the size of the fine and everything just does not tell the whole story. So this is the context, and now we'll turn to the lessons that we've learned. So first thing is that, well, we probably, when you're working at a financial institution, you're most of the time concerned with risks such as liquidity, solvency, and the like. But in reality, since the regulation is so complex these days, compliance is probably the main risk that small industry startups face. And to improve these processes, of course, since we had this bad record and we had to improve our image, and I can see in the audience that there are a lot of industry participants here. So you know that your reputation is probably one of the most valuable assets in this industry, and if you have a fine for money laundering, anti-money laundering deficiencies, it's next to impossible to connect with partners and basically do business in this area. So we had to actually do a lot to continue operating. And for us, speed was of a very big importance. So if you want speed in this area, you have to try to facilitate consultancy firms that operate in this area. But the problem with them is that while they are fast, they are mostly concerned that the procedures that they propose and the solutions that they provide are compliant, and they are on a very conservative side. So they are more or less better fit for conventional financial industry players such as large commercial banks, but not FinTech startups that have very idiosyncratic business models, and we are most of the time a PSP will have a one of its kind business model that targets a very narrow niche. So for us, hiring consultants was not was an option, but only a partial solution. So we had to actually dedicate quite a lot of resources in hiring compliance staff, and right now more than half of people working at Pervesk are working in the area of compliance in one way or another. So basically anti-money laundering specialists, transaction monitoring specialists, compliance specialists, and legal counsel. And of course, since the regulation is very complex, you have to perform a lot of tasks. And after a while, you see that quite a lot of things can be automated. So it's easy to have an idea and to see what can be automated, but it's so much harder to achieve in practice, because that actually requires quite robust IT solutions, and quality IT solutions, they require experienced developers, and experienced developers are not that easy to come by. And if you have them, you will always be prioritizing various tasks and trying to find the right balance of expanding your business and actually moving on what you already have and improving efficiency, improving the quality of your code and everything. So even though it might seem quite obvious, we've opted for this combined solution of hiring consultants that helped us to kick off with improving our internal procedures. But after that, we've taken over the wheel, and once we had competent staff, we handed the control of those processes to them, and this actually resulted in something that we are rather proud of. Of course, having your own procedures that are not resembling these templates that are usually submitted to the central bank and that are prepared by consultants have some downsides as well, because the central bank won't be familiar with these procedures, and it will take more time and more explaining to actually get them approved. But at the end, you end up with something that your supervisor is satisfied with, and something that is not a huge hindrance to your business. Now, the second lesson we learned actually has to do with communication. As I mentioned, we tended to keep all our interaction with the central bank strictly professional. Well, in a sense that we were not trying to get into the meetings with them. We were not explaining anything in a way that exceeded all the necessary communication required. And in this area, we have quite a few players here in Lithuania in the FinTech industry. So everyone wants a piece of central bank's attention. Everyone wants to get into meetings of them. So you have to be persistent. So basically, we had to drop our usual social norms. And if you are requesting for a meeting just time after time, you might feel that you are preoccupying your supervisor too much, and you might start wondering, are you doing this aren't you being strange to them, that you want that much of their attention? But in the end, I think that this paid off, and we have quite a few things that, at least to us, prove that. So right now, we request a meeting with the central bank for every, let's say, unconventional business case. If we have an unconventional customer, something that is very odd, something that is very uncommon in the market. So, for example, a company that is established in one jurisdiction but is operating in another jurisdiction, and for some reason they need an account in European Union. This has high risk written all over it. And of course, for the central bank, they want to be completely sure that you have done everything you can to mitigate the risk, that you have everything you can to make sure that this is a legitimate business with legitimate purposes and everything. So we do present all these cases one by one to the central bank if we feel that they fall in this category. We are not being modest, we are very persistent, and we can sometimes tell by the tone of the supervisor that they almost had enough of us, but still, we are continuing this practice, and I think it's so much better when you have your supervisor who actually knows your business and who had all the details presented to them in advance, and not the supervisor that comes into your office and learns about your procedures, about your customers only on site. Because when these on-site inspections happen, what we've also learned, there's not really a lot of time to for the supervisor to actually go very deep on each and every customer that they pick up. So the result, I will probably pick only one point from the slide. I think we were, the Bank of Lithuania was planning to do one more on-site inspection at Pervesk in 2019, but they called it off. And we feel that this is the result of us being so persistent and of central bank feeling that, if they came, they would not really learn much things because everything was already presented to them. So I think this is the biggest proof that our strategy and our lessons that we've learned actually worked. So to sum everything up, only in 4 points, well, compliance, I think, still is and will remain for some time the biggest risk for FinTech companies. You don't have to be afraid to admit that you've done some mistakes. We did some mistakes, but as you know, the courts are in Lithuania the ones that give you the final verdict. We can tell that it was not as bad as it might seem from the first look at it. We don't hold a grudge. Of course, it was very unpleasant. It took away quite some time from our business for developing it further, but trying to rebuild reputation is so much more important than trying to go around and act victim. And of course, good actions need good communication. So this is probably, even though it's 4th on my list, this is the most important lesson that we've learned, that you have to be in constant contact with the supervisor. You have to explain yourself, and that way all the things go way smoother. So that's pretty much it. Thank you for your attention, and I suppose this is now time for questions.
Yes. Yeah, there you go, I'm back. So, ladies and gentlemen, rightly so, Darius has pointed out that it is now time for questions. I just have one remark. I think while listening to your presentation, it kind of felt me started from the bottom, now we're here. Like, you were literally staring into the abyss, but then you took a step back, and that is a really good example on how you can remain motivated and continue working even with such adversity staring right into your face. So, ladies and gentlemen, please, anyone, any question. There are no stupid questions, right? We have this general rule. There we go. We have somebody.
So Darius, thank you very much for a very interesting and honest presentation. I mean, for all other financial market players, it's experience that I guess most of us never had and might have. So my question is about cryptocurrency. So as far as I know, you are one of financial institutions in Lithuania that are rather friendly to the customers that use cryptocurrency. And how much of what part of the whole sanctions and the fine would you allocate to the cryptocurrency? Would it have been different if you just worked with non-crypto clients, even high-risk clients? Would you think that?
I wouldn't assign any of this to actually virtual currencies and our approach to virtual currencies. I think if we were working with, let's say, shady Russian customers, that might have been even worse. The problem is, I know that Bank of Lithuania has a certain position towards virtual currencies, but it all boils down, in simple words, it all boils down to just manage this risk well. It's not forbidden to have a relationship with virtual currency customers. Yeah, so that's one thing. The other thing is I think this is probably a bit, it deviates a bit from your question, but you have to work only with the risks that you understand. For our group of companies, well, Pervesk is part of a larger group of companies. We have our origins in virtual currencies, and our shareholders, most of our technical staff, they have quite a lot of experience with virtual currencies, the decentralized ones, not the ones issued by central banks or the ones tested right now. So this is an industry that we understand. This is an area that we can actually track down and monitor well. We are not working, for example, with adult industry because, well, apart from a few clips that I've seen on the internet, we don't understand that industry. We don't work with military industries because these are industries that we don't understand, and these are also high-risk industries. So I think the point is that you have to work with the risks that you are able to mitigate, and I strongly believe that virtual currency risks are the ones that we can mitigate the best. Of course, it might seem that this translates into friendliness towards virtual currencies. But in reality is that, we are just willing to go an extra mile to mitigate those risks because, it's still the same cost of compliance to actually do the enhanced due diligence of, let's say, a customer, even just as, an everyday Joe from the street who happened to hold virtual currencies in its account at some time.
Right. Any further questions? There we go. We have somebody here.
Yo, hello. My name is Davidas. Really interesting to hear this quite a difficult challenge for your company and how you came back. But my question is actually about something that you mentioned. You mentioned that half of your staff, around half of your staff, is somehow related to compliance. And I think that this is quite a challenge, having in mind that there is one big player in the AML industry in Lithuania, especially in Vilnius, and that's one of the Scandinavian banks. So my question is how difficult it is for you, for not the biggest company in the world, to find experienced, educated AML experts, AML officers, and is it a big challenge for you? Yeah, thank you.
Yeah, so of course, being a PSP means that you need compliance specialists that are very well versed in very high risk customers. So this automatically disqualifies quite a lot of anti-money laundering specialists, especially those, even if they have some prior experience, working with anti-money laundering regulation and applying some due diligence, they might not be a good fit to your operations. And we've learned this from our experience. And from our experience, we actually had to say goodbye to a few of our staff members, that we hired from with a prior experience at one of those larger players here in Lithuania that just, did not perform. But the more important factor in this field is, to actually find a guy or a girl that has the capacity to learn your industry and learn the risks that you are facing. And once you do the training, then you are very afraid to lose that guy, because after that, he or she becomes a very valuable asset to your company. Now, of course, out of those half people, well, it's a better half of our company working in the AML at Pervesk. Roughly half of them are senior specialists, so basically those that would be able to conduct their activities on their own without any supervision. Of course, the higher the risk, the more you need 4 eyes principle. But the rest of them are, doing these routine tasks, such as filtering out only, just very obvious transactions that have not been flagged by your system and so on. Is it difficult to find people to work in this area? Well, for those junior staff members, it's not. I'll be honest. It's not really a problem. I mean, there's a lot of people just, finishing universities, and you can fish around in that area. Just filter out what you feel does not fit in your company, in your culture, and you're good to go. When it comes to senior members of the staff, well, this is where it becomes a problem. So it's difficult.
Okay, thank you very much. I will try and stick to the timetable quite strictly. So I'll thank Darius one more time, ladies and gentlemen. Please give a round of applause to our first speaker. Thank you very much. And what we will do is, obviously, we have a networking event planned. So if you haven't worked up the courage to ask the speaker a question whilst they're on stage, please stick around. After our last speaker finishes their presentation, you'll get your chance to approach the person directly and ask your questions. So without any further dragging of my feet, I will introduce our next speaker. Ladies and gentlemen, please welcome Head of Open Banking Department of Neo Finance, Aleksėjus Loskutovas.
Hello, my name is Aleksėjus, as you heard, and I am from Neo Finance. Today we are talking about mistakes and fails, and it's my favorite theme because I am a professional failure, professional mistake doer. Have 10 years experience in startups, and no one of them has flew up. I have lost a lot of money on that, and I think that it was the best university I have graduated. So continue. Oscar Wilde says that experience is simply the name we gave to our mistakes. Yes, it's much more interesting to talk with a person who have big experience, but you should understand that he have much more mistakes experience, as he told to you, and the attitude on that mistakes is the main reason of this experience. I like to attend events about mistakes and fails, and if you have visited some of them, you will notice that there are 3 main areas where any business or any startup do mistakes. First of all is relationships with investors. Yes, it's always is very hard to keep it in good quality. The second area is co-founders and staff matters. It's a very big area of mistakes there. And the third one is mistakes in running business, in starting or in finishing, of understanding in what moment you should finish your business and not doing it at all. But today I have two news. One is bad one, and now is good. Bad news is that I can't talk about mistakes in company I'm currently working at because of three reasons. First of all, it's publicly listed company, and today we are presenting some of our reports and figures, and it's not good time to remind everyone about our mistakes. Second reason is I'm working too short in that company to make mistakes by myself. And I hope that there is no mistakes in this company at the moment. So it's a third reason. But the good reason is that I have more than 15 years experience in financial sector, more than 5 years experience with startups, and as I told, I have a lot of mistakes previously. So let's talk about one project which was held here in Vilnius, in Lithuania, in 2016-17 years. And the context of all this project was like I was asked to join the new management team at one rather big credit union. And our goal was to add additional capital in that company and reorganize it to a specialized bank. In that time, it was quite popular business idea. As I know, around 10 credit unions were planning to do the same business. From today's view, only one is succeed. Only one succeed. It's you know that union by Mano Bankas. 4 of them are in the process, 3 or 4. 2 of them are in bankruptcy, and rest are still work as a credit unions. So the statistics is like in startups, only one succeed in 2 years. So I was asked to join that company with experience in the financial sector, and that's all. I joined this project in rather after some main decision was made. I mean that somehow was done due diligence, and it was done not in good condition. I mean that it was the main problem and main mistake in this project, this not very deep due diligence, but it's topic of another presentation. So I joined this team, and after 2 months, we understood that money we were planning to add to capital, money is not enough, and more or less we should find somehow 5 times more money than we have, and oops, our investor was not ready to give 3 million instead of $500,000. So we have quite good contacts with central bank, and we asked to listen to us. We explained all the story that we are new guys in this company. We want to run this business out to help this union came out of bankruptcy, but money is not enough. What should we do? They said, okay, guys, you have 3, 4, 6 months to find more money. Good luck. Yes, good luck. And the first story about investor search starts. After 2 months, we were in the same room with the same guys, and I have some information about our new investors. And I was quite happy because we have found them in a very short time. But colleagues from Central Bank said, okay, Aleksėjus, we have seen your portfolio in LinkedIn, and you know you have a lot of experience in other countries, so you should know that investors from the East, from Russia, from Ukraine, from Belarus, is not very welcome here in European Union because financial sector is quite strategic, and it's not good idea to have them. I hope you have, you don't have such investors, but I have. Yes, but I had, because half of my working experience was in that region, and of course the easiest and the quickest way to find money was there. Yes, and it was a big mistake, a lot of time and a lot of traveling expenses, but we don't succeed. And as you understood, another investor, we don't find another investors from the West because the company is in bankruptcy now. But this lesson is only part of those 3 usually mentioned in fail conferences. But I'd like to share my opinion about that in a financial institution, even if you need to have any kind of license, you should know that the place to make mistakes are the same, but you can make this much more frequently because in all these fields, a regulator is participating. If you need an investor, they should approve that. If you need a co-founder or top management staff, they should approve it them too. And my second story is about team. Yes, as I told, if you need someone to run your project with you, and it is FinTech, and you need some kind of license, all these guys should be approved with in central bank. They should be of certain experience. They should be with clear, transparent reputancy, and sometimes your classmate or your best friend is not so clear, and it's not so clear, not for everyone, but only for doing that business. And it's not bad things, but you should always remember that. And the mistake of myself was that previously I have some bad experience with startups, and when we try to approve myself as a board member, this process usually lasts from 1 to 3 months. My process lasts 9 months. And the last questions I receive a week before we lose our license. Yes, and everything was because of my experience as a startup, because I have some companies here in Lithuania. One of those companies was in bankruptcy, and a lot of question about why I don't help this company to rise up, and to explain that it's a startup, it's a rule of games. If it's not running, you close it. But a lot of questions about that I receive. So always think about your co-founders, about your colleagues, and remember that reputancy in that business is very high demanded. And the third story about the project is about running business. Yes, running business. as you probably know, in any business with license, you can't start this business before you receive license. Yes, because it's illegal. But the situation is that you can stop this business. You can't stop this business anytime you want. Yes, about a moment. I lost my mind. Sorry. So, okay, about running business. Yes, it's good. Yes, it's a good good situation. It was a good situation, but I have first meeting with my bankruptcy administrator when I was running my first startup here in Lithuania, and the second meeting with bankruptcy administrator was when we lost our license in this credit union. And but my communication with this guy was very different. I understood that all I have done with my first startup, when I was trying to be very important and very bad guy to him, could injure me in after some time. Then I will ask to approve me in some top management position. So the negotiation and all the talks with new bankruptcy administrator was in much more easier way and friendly way, because I should help him or them to close this company properly. So don't forget this, that opening is very good. Opening is very important, but closing the company is very important too, especially if you are dealing and you are planning to deal with some central bank guys in the future. That's it. And the last idea is from Henry Ford, that the greatest thing in the life is experience, and even mistakes have value, and I have a lot of such value. Thank you.
It's very good. Thank you, Aleksėjus. So the key takeaways I hear from your presentation is you have to be extremely careful as to where you look for investment, who you employ, and how you treat the regulator, right? In the end of the day. Because if you're not planning to withdraw from the industry completely, probably having good relationships with these individuals is beneficial in the end of the day. But obviously, probably also being able to pick yourself back up and staying in the industry is also something that is a thing that we can learn from you and your experience. And now, ladies and gentlemen, I will defer to you for questions. So many hands, so many to choose from. Anyone? There we go.
Thank you for such a frank story, Aleksej. My question is more like on emotional level. So what, a lot of mistakes, a lot of experience, but what does motivate, how do you find motivation to move forward? Maybe you can share some insights, how to stay strong and keep moving.
As I told in the beginning, the main thing is attitude. You can look on these mistakes as a problem, as on mistakes. You can think about them days and night. But if you look on them as on lessons, and you learn on that lessons, it's not mistakes. It's experience, and it's this experience which hurts you in some way, financially or morally. This is only lessons. It's not mistakes. Thank you.
Everybody has to learn from Aleksej here because he seems to be a pillar of optimism, which is great. But any further questions, ladies and gentlemen? As I said in the beginning, if there are no further questions, then please, by all means, don't be afraid to approach the speaker during our networking event afterwards, and make sure you ask all the questions if you are shy. I know Lithuanians are quite reserved people, so not everybody is going to jump straight into questions. Ladies and gentlemen, I will introduce our next speaker. That will be CEO at ComplyTech, Michel Farah. Please give a warm welcome to Michel.
I need the clicker, yeah. Hello, everyone. Do you hear me well? Those in the back, if you're still awake, do you hear me? Okay, great. So I think that's my name, Michel. I'm not Lithuanian, so I'm the third bad guy now, I think, among four, right? So what I want to share about myself first, I think I know many of you here. I have been in Lithuania for a year and a half, and I think that's my second winter that I will try to survive. But it doesn't seem really like winter this time. So again, thanks for having me here. I'll try to be quick. I know we are a little bit behind schedule. No? Okay. Then I can continue for an hour or so. That's fine? Okay. So I want to be less technical. I know Darius and Alex, they were really technical, so I'll try to be more simple, realistic. As the saying goes, the fish is the last one to recognize the water. So I want to talk really about very common sort of mistakes that sometimes we don't feel that we do it. So with that, without further ado, I will move on. That's me, I think, for so many years. I'm still probably the same situation. I was fortunate enough really to be part of co-founding teams in few organizations across the globe, not in one sort of country. So you could imagine, you know, what you can go through with so many different aspects. I mean, the first mistake, those are, I think I call them, sorry, how I go back? I call them my 3 mistakes. So actually there is much more than that. Like Alex said, I'm a professional in committing mistakes. I also lost lots of money on that. It's not cheap though. So if we go to my first mistake is, you know, at a certain time of my life, I was very passionate about doing things. And I think I'm still the same, a little bit with the changes, more wiser probably. So with that passion, and I think many of us would be probably the same, we try to hold so many eggs in the same hand, or, you know, so we try to do everything. Being a startup, as you know, you have limited resources, so you try to save on the marketing, you try to save on the business development, you want to be the co-founder, you want to be the CFO, you know, CTO and all that stuff. And I think that's deadly mistake for me, because I think what we need to do here is to have a strong team, to empower them, to challenge them. But of course, you need to be selective. You need to have somebody who really believes in your product and in your vision. If you don't do that, better to stop because you can't continue. So that's my first one. Moving to the second one. As I said before, you know, when you have the passion, you want to come up with a product that hit the market. You know, you want to be famous. You want to be, you know, everywhere. Everyone talks about your product. I think you overcome sometimes what you want to do to sell that product. So, you know, it's great to have a great product, but if you can't sell it, I think you're stuck here. So you're losing your resources, you're using your time, and I think your risk is very high to fail in what you do. So I think the right balance, to strike the right balance between marketing, between developing your product, the time you spend, the money, the efforts, is extremely important to get through and move on. So again, like I said, if you have a great product but without a clear marketing strategy, you won't succeed. Sorry, I'm not sure if I'm used like to engage the audience. So if you have any questions, you can stop me and ask me the question. Is that okay? Okay. This is an important one here, although probably we don't, it's difficult sometimes to calculate what is the, or to understand whether it has a tangible return on what you invested. So oftentimes we are confused on what is marketing is, how we wanna promote our products, how we wanna let our clients or our potential client that we exist somewhere. I mean, from, again, my experience, I think the mistakes I did here is to choosing like bit and pieces, not to come up with holistic marketing strategy. What we did in a few occasions, we tried to be visible on like industry events. So we tried to sponsor certain events. And as you might imagine, those are not cheap. So really you put big bulk of cash to be present. But regrettably, we didn't really get the return on what we invested. So I think allocating the right capital and to the right place is very important to be able to promote yourself, to build the brand. In my opinion, I think having an organic PR plan is extremely important. It might not give you quick return, but I think it would be slow and steady, but eventually it will help you build the brand. I think finding a PR partner who is really able to support you and understand your industry. Of course, not all PR, they might understand your product, you understand your market or client base. So I think focusing and doing your due diligence to find the right PR partner, I call it partner, not agency or other names, is important to help you to succeed. All right, so I think those are my my mistakes, and they are common in every startups. I think it's important here, once we did the mistakes, do we learn from them or we just let them go? Like I said, for me, I'm this passionate guy. I believe much in what I do, or if I don't believe, I don't get into what I do. But sometimes I might overreact. So I think when you need to go through this, you need to leave your ego at the doorstep. In other words, you need to delegate, you need to empower your people. And I think the fine line here being very confident, believing in what you do, and the ego is very fine line. I think you have the ego if you believe you are the best in the room. Regardless of whoever or what qualities we have in the room. To know everything, I know everything, I can do it, don't worry about it. I think that we're discounting others, and we are focusing on our ego. Again, I think failure is important. The more experience you have, the deeper it is, I think the more mistakes you do. So probably we shouldn't really be afraid of mistakes, but we need, to survive it, not to kill us. So I think it's important to stand up and focus again on the goal that you have, so you learn from it. This is probably a surprising one, but what I do list my mistakes. Whatever I do one, I list it. It's not really to torture me, to punish myself, but it's more about to remind me of what I did. I try to do some brainstorming on what things could be done, what I was trying to achieve by doing that mistakes, and how I avoid it. So I think having that mistakes, probably we all remember our mistakes, but having a list in front of you, it will help. Like I said, I investigated, I tried to understand what I tried to achieve, what I did wrong, and how I could do better. And again, I think we need to keep dreaming, no matter how many mistakes we do, as long as we're alive. So I think with that, you know, I need to say, I think, the Lithuanian ačiū, and thanks for your time.
Thank you very much, Michelle. I think from what I listened to in your presentation, you and it rhymed in my head. You're a DIY type of guy, right? Do it yourself, right? Less sharing, more like, yeah, I'll take that responsibility. Yeah. I'm the CIO, the CFO, the CIO, the CTO, HR. You name it, yes, right? And I think that's what the key takeaway, right? Share workload, share responsibilities, make sure you have professionals of every area that you require in your industry to be able to distribute the workload evenly and obviously make decisions in a more kind of sensible manner and not being overwhelmed with all the stuff that you need to do at the same time. Ladies and gentlemen, on that, obviously, a very good presentation that outlines so many things that need to be taken into account. We have questions over here.
Hi, Michelle. Thank you very much for presentation. I have two questions in one. So first of all, after spending a year and a half in Lithuania, could you say that Lithuanians are ready to fail?
Lithuania is what?
Are Lithuanians ready to fail? Like from our mentality, being in a startup world, are we taking risks and improvising on the way, or we do everything in a more secure way?
I think in every business, you know, you need to take certain level of risk. So probably I forgot to introduce a little bit myself in more details. I'm a compliance person. I believe in controls and risk mitigation. I believe, you know, you need to take certain risk, but you need to understand how you manage it. So I think in Lithuania, when I came here, I mean, I was impressed with what's happening, especially if we talk about FinTech. You know, with all what's going on in terms of attracting the FinTech players and so on. I mean, there is risk. Like I said, there is risk in the market. We hear some news. I think Darius shared about what happens with them as being, you know, fine and so on. I mean, that's a natural kind of cycle of a growth for every market. I think people, they learn from mistakes. So if you don't take risk, you don't do mistakes. And if you do mistakes, you might get, you know, penalized for that. But again, I think it's important to stand up again and redo what you believe with.
And the second question is about your company as you do the compliance product. So who are your customers? The ones that already failed with compliance and then looking for this last hope, right, to support them, or actually companies want to protect themselves in the beginning?
Yeah, I mean, and what we do, like in our product is about compliance, is to help companies and fintechs mainly, or financial institution to manage the KYC and onboarding and understanding your customer. So you manage that risk of that risk area. I mean, yeah, we have few customers. We're talking to them. We did some mistakes also on that front. So we're trying to rethink of how to shuffle things, to diversify. Sorry, I keep playing with that. So I'm not sure if I'm answering your question, but you can't just come up with a startup and do something and without, you know, understanding the client needs in the market and tailor it again to fit the client's needs.
And we have another question over here. Yep.
Hello, and thanks for the presentation. Since you have mentioned the allocation budget for the marketing in the very beginning, it's quite important thing in, you know, when you are planning to head off. Do you have any tips or tricks, you know, for beginners, for new startups, how to predict the marketing budget and, you know, what measures, what the thresholds to have in mind? How much money do you need, or will you need?
As much as you have. I think we all know. I mean, I worked with the global companies, and these companies they spend massive amount of money on marketing. So we all know that marketing is essential for you to succeed, right? So you need to be reasonable. Again, we're talking about startups, right? So the resources are limited. So we cannot say, you cannot say to your investor or shareholders, I wanna do this, and your resources are limited. So again, I think striking the right balance is important. So how you do that, I think you need to have specialists to understand your products, to understand your vision, to understand your client base, and determine how you're gonna scale on your limited resources. Does that make sense? Yes. Okay, great.
Any further questions? No, it seems. Okay, well then.
So another issue. Thank you again.
Thank you very much. Thanks. Thank you, Michelle. Great. I just switched off the mic. All right, so ladies and gentlemen, our next speaker that I'd like to introduce on stage for you right now is CEO at Ondato, Liudas Kanapienis. Please welcome him to the stage.
Hey everyone. Okay, my name is Liudas Kanapienis. I'm the CEO of Ondato, and I will talk about company that I'm managing now and the mistakes that we made. Actually, one mistake that we made at the very beginning when established this company. So what we do first, we are the Know Your Customer, or as known as KYC company. From the data verification, from ID verification to data validation and monitoring. So lots of places where to make mistakes. Yeah, so because we do lots of analysis of photographs, documents, of course the data itself and all the stuff. So, but first of all, why to talk about mistakes? Because everyone does that. Here, yeah, okay. So we all remember this one, yeah? It just went recently. The Tesla, the new stuff, big company, huge funding, and they had a small mistake as well during their presentation. You know, the glass.
Glass, please. Yeah. Sure? Yeah. Oh my God. Well, maybe that was a little too hard. Sorry? Okay. It didn't go through. So that's a plus side.
Let's try the
right? Try that one, really? Okay.
Yeah.
Sure. Oh, man. It didn't go through. All right.
And why I'm showing that? We have a product that actually does the same. It's just for the finance industry, online business, for allowing the good customers to board with the bank. It means that all the bad guys shouldn't go through the window. And at the very beginning of this new venture, we took an existing technology, we took a look at it, okay, looks fine. It goes through the process according to the laws, how it's described, all this stuff. And we did the thing that Michel said that you have to do, basically, to do the sales. And I did that. You know, I'm the FinTech guy working here for quite a long time, lots of relationships. I had a really powerful launch, running around the clients. And then I met a company that we had already the integration with, discussing about new things. And they're saying, okay, man, we have a problem here. Because the Winnie the Pooh just actually boarded with us. And I'm like, what the fuck? And actually, Winnie the Pooh went through the process of the onboarding. So it was the photograph of the Winnie the Pooh, on the document as well, with all the data, all this stuff. And that didn't really comply with our vision, actually, of how we interact with the customers, and what we are actually doing is the same as Tesla with this window. So, of course, I went to programmers, so what the hell is going on here? And they said, yeah, well, the actually initial idea was that our solution has just to recognize if it's an ass or a face. And it's like, okay, but we need to prove is the picture. And yeah, well, yeah, but it has a face anyway, yeah, isn't it? So of course we had to close the door to shut down, basically, in our basement. Of course, not in the basement, in the office, with the coffee, and we spent like a 6 month of rethinking of everything, actually, about all the processes that we have, about what we want to achieve, what we want the solution look like, and what we're actually delivering to this market. But the main idea and the main mistake that we made is actually you have to define what you're actually doing, what is your mission and your vision on the product that you are delivering, and focus on sales from the very beginning, Michelle, I wouldn't suggest is a really good idea, because I made this mistake, and it was really a huge one, because on this particular thing, I lost about 25 to 30 grand a year with this one client, because the relationship with them now is really good. We can laugh on Winnie Pooh now, but still, of course, we do not operate with them. Yeah, and that was a really good mistake for us, and really good timing for us to make, because if that mistake would appear on later stages, of course, the results and everything would be much, much, much bigger. When you have those kind of mistakes at the very beginning, and you can actually just like escalate that and make the solutions for that, then they create a big value. But anyway, mistakes makes us human, but the most important thing actually is that mistakes makes us understand what friends we have and what kind of cooperation with other people we have, and if the other side is human as well. Because we do all understand that it's impossible if you are making something to avoid any mistakes. It would be just impossible. And if going through the later stages, now we spent like 2 years with this project, and of course there were more or less different mistakes, and every day we're ready to take them and to solve them, but that's what makes us basically unique and experienced. So yeah, that's it from me. So I'll take any questions from you guys.
So thanks very much, really. I think while I was listening to your presentation, I understand that probably one of the key things in any project or any company is having those fail-safe mechanisms that allow you to spot an error in its early stages or in its infancy, right? And then also having the ability and the committed staff that want to sit down in the basement, as you said, for 6 months to do the redevelopment of the facial recognition technology, so it doesn't then try and recognize Winnie the Pooh as an actual person, right? That's probably one of the key takeaways from the presentation.
Yeah, so there's lots of theories, but they're more or less all the same. Yeah, so like to try to test fast and to learn fast, and then to deliver fast. Yeah, so but just we have to understand that it's impossible to do everything right from the very beginning, because you actually don't know what you are creating at the very end. So that's
like a Tesla Cybertruck, for example, yeah. Right? So, ladies and gentlemen, I'll pass on for you to ask any question you would like. Show of hands. As always,
lots of hands.
Yeah, everybody's very reserved.
I'll take this time then.
There we go. We have questions over there.
So facial recognition was one of the challenges in the past. So what are the new challenges you face today?
So you see, that's a really good question. Yeah. So the challenge is that actually So there's just risk that you're working with. Yeah. So there's of course plenty of the challenges. From the technology supported, from the devices that the users can use, and all the stuff. So there's lots of things around. One of the kind of new interesting threads is actually the deepfake technology. Because it's still a kind of new stuff, so it's not well tested on everywhere. And the worst situation is then when you think that you are secure for something, but you are actually not. Yeah. So you have to always test new things and new things coming to place. But as all the companies, we have the same challenges, So from the resources, from everything, pipelines, deliveries, IT things, and all the stuff. So it's all the same.
Any further questions? There we go. We have a question over there.
Thank you, Liudas, for your presentation. Yes, you are the best, one of the best. Okay.
We're looking to become the best. Yeah.
Yeah. My question is, you are expanding your business outside Lithuania. So, what kind of challenges you are facing when you're entering a new market?
A really good question. So, you see, different challenges depending on the different jurisdictions. Yeah? So, challenge number one is a simple one, very straightforward, is a time zone. There's lots of mentors as well talking about, you have to delegate, you have to do stuff and all the stuff, and keep your time for yourself. But there are things that you just have to do yourself anyway, because the other party expects you to do that. And now we have partners from Jamaica to Japan. So that means that I'm actually online from 6 a.m. to 12 p.m. Because Jamaica guys might just need to have a talk, about something. And you have to do that. So that's the kind of the challenge number one. So sharing responsibilities is other, and I think it's for everyone. Because especially when at the very beginning, when you're creating the startup, you are trying to minimize the mistakes level, because you are making mistakes everywhere. So still everyone has to minimize that level of the mistake that they're making. So one of the things that everyone is trying to do is to minimize the level of mistakes in the fields that others are doing, So like, I'll do that myself, it will be better. So I think that's the most common challenge for everyone, So and it's always about trying to beat yourself that, okay, so I will delegate that and I will try to keep away from that, but then again you're stepping in, and so it's the most common things. But about the other markets as well, so sometimes the mentality might be an issue and the challenges as well. Understanding of the different markets, we in this market we're really so much reserved, and Michel can tell, so you see nobody is asking questions and all the stuff. It's like everyone is thinking about themselves, and in other markets they might be very straightforward, and ask you whatever they want and all the stuff. So it's really different sometimes. But when you kind of know what to expect, it's not a problem at all.
So I think giving up your baby for somebody else to look after is always a difficult thing to do, right? Being able to leverage time zones, I would actually rather probably get some sleep instead of speaking to somebody in Jamaica in the middle of the night, but I understand how sometimes things can lead to those conversations at a very late hour for us Lithuanians. Any further questions, ladies and gentlemen?
So I'll take this few minutes I left,
Yep.
So because I have 2 minutes. I'll thank the organizers actually just for organizing this event, because in my strong belief it's really more important to speak about the mistakes and failures that we make not about just the success stories and how fancy we are and how nice we are, because this is the only way of actually learning the things and going through them. So thank you guys, and thank other people for sharing that.
Thank you very much. So before I move on to our next speaker, I'll read an email to you. It says, I started at a crypto payments firm called Bitstrat in 2014 that allowed physical shops to accept cryptocurrency as payment and get settled in their own currency, for example, euros or dollars. At first it went really well, but then we did fail to realize we weren't really solving a problem, and the success was just coming from highly fanatic cryptocurrency owners that wanted to spend it because it was just a fun thing to do. Eventually, we shut the company, and in a couple of years, I joined BitPay, who provided the same service as Bitstrat, but then online where there were, in fact, payment in cryptocurrency in a lot of cases, provide an advantage over other payment methods, so we could solve a problem here. I will not go into further detail because I want to keep a little bit of intrigue. I'd like to invite on the stage to present his success or failure story, Business Development Manager at EMEA at BitPay, Max Barendregt.
Yep, it works. Let me put this up here. Well, thank you for summarizing my entire presentation. I'll be done in a second. So yeah, usually when I give presentations like these, my girlfriend will ask beforehand what the topic is about, and she offers to rehearse it with her. And this time I told her that the topic actually was mistakes and failures, and she paused for a second and she said, "I think you'll do just fine." So I didn't rehearse it with her. No, I'm just kidding. I didn't rehearse it with her because I thought that if I fail dramatically at this presentation, I will still have succeeded in some way. So anyways, my name is Max Barendregt. I'm from Amsterdam. This is a picture from the canal where I live. And in Amsterdam, I work as a business development manager for BitPay, which has their European headquarters in Amsterdam. And I look after the European market. So there's also a bike here, and I'll get back to that later in my presentation. Anyways, just a brief intro on what BitPay does, or a background of BitPay. So we were founded in May 2011. We're almost around for 10 years. In those 10 years, we've acquired over $70 million in funding. We're just short of 100 employees worldwide. And over the last 3 years, we've processed over $1 billion worth of transactions per year. And to me, actually, the coolest fact on this slide is the first one, since we are actually the longest still standing crypto company in the industry. And ironically, that sounds like I'm talking about we're the oldest still functioning steam train or the oldest still functioning windmill in the industry. And I really hope that years down the line, people will actually look at us that way. Although for now, I think we're still quite innovative, which is good because otherwise I wouldn't have been invited to give this talk to you guys. So yeah, what we do is quite straightforward. We allow businesses to accept cryptocurrency as a method of payment, and then we settle these businesses in their own conventional currency as if it were a regular transaction which they do daily. And in the process, we give them the guarantee that the amount that they ask from their customers is actually the same amount that they'll be getting the next day in their bank account, regardless of what the price of cryptocurrency does. So we do this for over 100,000 businesses. We have signed up over 100,000 businesses, large and small, across all industries. And what I find highly exciting about this is that you hear nowadays big corporates talking about integrating blockchain as part of their supply chain or as part of their accounting backend. But no one knows really what these companies are trying to do with blockchain. Meanwhile, yesterday I took a flight from Amsterdam to Vilnius, and I flew Air Baltic actually. And I most likely was on the plane with passengers that had paid for their airline ticket in cryptocurrency, as Air Baltic has been accepting cryptocurrencies as a method of payment with BitPay as a partner since 2014 actually already. They were, by the way, the first airline worldwide to accept crypto as a payment. So, but today I don't want to give a pitch or a presentation about BitPay, but rather tell you a story around my personal experience with failure in the ever-evolving industry of the cryptocurrency industry. So let's do a quick refresher with you guys. Who remembers exactly what happened on Monday the 15th of September 2008? Okay, it was a lot. Sorry? No, it was not the first Bitcoin transaction. It's a good guess, by the way. No, okay. Let me give you a small hint. Just shout if you know what happened. Does this ring a bell? Lehman Brothers. Yes, correct. So Monday, the 15th of September, 2008. Since we're at a FinTech event and we're talking about failure, why not just kick off with the largest failure in the history of US finance? So Monday, 15th of September, 2008, Lehman Brothers, holding over $600 billion in assets, went bust. And this set off a chain reaction that would lead the whole global economy into a deep, deep downturn. Or as Ben Bernanke, the then chair of the US Federal Reserve, called it the worst financial crisis in global history. Central banks all around the world were forced to lend to and bail out commercial banks on a massive scale because, yes, they were too big to fail. Apparently, anyone is allowed to fail in this world, but there are banks actually that have a godlike status that are actually too big to fail. So failing here is an interesting notion, as in this case, the bankruptcy of more banks would have meant a collapse of the global financial economy of apocalyptic proportions. Wages would no longer be able to get paid. ATMs would stop working. People would start looting supermarkets for food and break into pharmacies for medicine. It would really have meant, it would really have set off, it would really have set back our society a couple of hundred years. And there's only two words that can describe that. So the banking system failed, and now governments had to step in to prevent total chaos. And this invoked actually great distrust in these financial institutions that we used to trust our money to. And at the same time, it raised the question why the general public, the taxpayer, would actually pay the costs of the mismanagement of these financial institutions that we used to trust. And it was during this peak of the distrust in our traditional financial institutions that Satoshi Nakamoto, which is a pseudonym of a person or a group of people, its identity is still unknown. We still don't know who he is, she is, they were. It was around this time that they published the Bitcoin white paper. And the Bitcoin white paper proposed a trustless digital currency that would be registered on a decentralized ledger called the blockchain. So on Saturday, the 3rd of January, a couple of months later actually, the front page of the Times looked like this, and it announced another bailout for banks that were too big to fail. Now, this wasn't really surprising anymore, as it had happened a couple of times, although it still made the front page of the Times. But there was another event that happened that day that didn't make it to the front page of any newspaper. And that was that the first block of the Bitcoin blockchain was mined by Satoshi Nakamoto. And in this block, and this is super nerdy technical stuff, in this block here he included the headline of the newspaper of that day about another round of bailouts for banks. And we can only guess why Satoshi Nakamoto put this in the first Bitcoin block. But to me, it says that the failing of the traditional financial institutions was really the last nudge that was needed to kick off Bitcoin and cryptocurrencies as a new way of paying around the world. So the cryptocurrency landscape, it has fascinated me for years by now. And as a place where most fascinations start, mine started at university during my bachelor studies at this rather uninspiring building, which happened to be my university. I was doing a bachelor's in science, business, and innovation, which weirdly enough coincides with the translation of Mita for quite a bit. But anyways, as part of my studies, I was following a laboratory class there. And the assignment was quite straightforward. We had to get proper medicine, and we had to compare it with its illegal counterpart. And small detail, we had to arrange these medicines themselves. So we went for this. I don't know if any chemists in the room recognize this chemical structure. No, but it's a tough question, I must admit. Okay, let's zoom out a little bit from the molecule. Does anyone recognize this pill? Yeah, okay, I understand that you don't actually shout out loud when you recognize it. But you're right, we chose Viagra to compare, just because we thought that it would be very easy to get a counterfeit pill to order it from the internet and then compare it in a laboratory. And it was quite easy. The only thing was that we had to pay with Bitcoin. And that was actually the first time I came into contact with Bitcoin. At the end of the whole university course, I couldn't care less about the molecular structure of medicine, but this Bitcoin transaction had sparked my mind. And I thought, like, I really needed to do something with it. So actually, my best friend Casper and I, we decided that we had to do something with this new technology. And back then, there were already some e-commerce shops accepting Bitcoin as a method of payment. But meanwhile, we saw that offline, there was no way, there were no shops yet accepting Bitcoin as a payment method. So our assumption was that there was a lack of knowledge about cryptocurrencies and how you could pay with them, and that there was a lack of knowledge about how you could accept them. And we decided to bridge that gap. So in April 2014, we decided to start Bitstraat. We ordered 2 things from the internet, some business cards and some hardware from China. And we built something that looked like a point-of-sale system. This was one of our first prototypes. It's really nothing more than a tablet on a stick, but for us, it worked. And we put this in our backpack and we went to pitch to several crypto processors. And at that time, BitPay had just opened up their European office in Amsterdam. And it was a great fit, so we closed a partnership deal with them, and we actually wanted to bring Bitcoin to the streets. Now, the principle was the same as BitPay has. We would allow businesses to accept Bitcoin as a method of payment and settle these businesses in their own local currency. And our ambitions were big. This is from a crypto news blog. It says, Amsterdam aims to become Bitcoin capital of the world. That title is false. It should have been Max and Casper aim Amsterdam to become Bitcoin capital of the world, but we took it anyways. So we literally went door to door in the popular streets of Amsterdam to pitch our product to hotels, bars, restaurants, barbershops, sock boutiques, anything. And of course, most shops said no, but some decided to give it a try, like this barbershop. And what we would do next, we would involve press, which you can see a reporter back there already taking a photo. And then we would go online and we would shout about these shops accepting Bitcoin as a method of payment. And what would happen next was amazing, because there was such a fanatic community of cryptocurrency owners back then online that these people would actually go to these shops just because they could pay with cryptocurrencies for the products and services that they would sell in that shop. So we were featured actually in national newspapers. We were invited to startup reward events. This, by the way, is my buddy Casper. He now runs a cool project called Guts that does smart ticketing on the blockchain. But anyways, so we actually thought we were on top of the world and we could retire in a couple of years. As you can see from our happy faces here. There was just one thing that we failed to realize, and it was, since we were so blindsided by the possibilities of crypto, and we thought we had really seen the future, and I think that's still partly true, but what we failed to realize is that with the use case that we chose, we actually were trying to solve a problem that did not exist. Paying in physical locations where the receiver of the transaction and the sender of the transaction are in the same room was super easy, super cheap, and super fast for both merchant and consumer. So what could Bitcoin possibly improve there? Now, looking back in hindsight, the reason for our early success was based on the fact that we were simply riding a hype train. And when at one point our traction decreased, we faced the fact that that paying with Bitcoin in physical shops was simply not, there was not enough demand for it to make it a viable business. Meanwhile, at BitPay, they were coping with failure of their own. A lack of focus on where to allocate the financial resources to had led to the point that by the end of 2015, 50% of the staff had to be let go, which was by far the darkest episode that BitPay has gone through. Among this 50% was actually almost the whole support team, except one person. At the same time, the workload for that support team stayed the same, which resulted in the situation where every person in the company had a support role to fulfill. And I want you to think about this. The finance department, the marketing team, but even the developers, everyone was suddenly fulfilling a support role within the company, talking to customers every day, answering the most stupid questions that you can think of. But this led to a situation where we had a far better understanding of the customer's needs, which led to a clear focus in terms of how we could improve our product and business model, which then led to improved customer experience and more revenue. And in hindsight, the failure that first led to firing half the company is actually led to the complete turnaround of the company that allowed BitPay to secure their Series B funding of 40 million in April 2014. April 2018, I'm sorry. Now, looking at the future for the cryptocurrency industry, I actually did not have enough space in my luggage to bring my crystal ball, so sorry for you who were hoping for some price predictions, but I'm not gonna be able to give you any. But I do want to share my thoughts on where I believe that this industry is going. So, looking at blockchain and cryptocurrencies, I think it's obviously a truly revolutionary invention that has led to the foundation of a complete new way of people being able to transact with one another. But I believe that as a global payment method, the cryptocurrency Bitcoin is fundamentally flawed. And I know that this sounds really weird to hear from me, as I've been talking for the last 20 minutes here, and I'm representing a company that's literally called BitPay, but I really think that Bitcoin as a global payment method is flawed, and I'll tell you why. So, for a good form of money to work, it will actually need to tick 3 boxes. It needs to perform well over space, over skill, and over time. And I know that this sounds super philosophical, but it really is not, so let me allow to elaborate. Space. This basically means that a good form of money enables you to transact with a person anywhere, no matter the distance. If you're in the same room with one another, it's easy, it doesn't matter. But and that we had to realize that the hard way with Bitstraat. But once you get further away from each other, it gets harder to transact with one another. So a good money will need to be performed well also over a large distance. Then scale. This simply means that the money that you're using can easily be divided into smaller sub-particles that are less than the unit that you're transacting in. With euros or dollars, we have a maximum division of 100, which we call a cent, which allows you to go to the store and buy a pack of chewing gum for 30 cents. And time, it means that it will allow you that if you buy that pack of chewing gum for 30 cents and you eat it all today, which I wouldn't recommend, but hey, your life, you can go back to that same store tomorrow and buy another pack of chewing gum, and it's probably also going to cost you 30 cents. Now, comparing Bitcoin with conventional money across these three parameters, we can conclude the following. When it comes to space, Bitcoin truly crushes the competition. I could be standing here right now on stage, send out a Bitcoin transaction worth $100 million from here to a friend I have in Chatham Islands, New Zealand, which if you take a globe and you look at Lithuania and you look what's the farthest away on earth you can get from Lithuania, it's actually the Chatham Islands of New Zealand. And if you don't believe me, you can test for yourself. And I could do that right here, right now. And that transaction would be instantly sent without any banks involved, without any third parties involved. And try doing that with the traditional financial system that we have in place right now. So Bitcoin really crushes conventional currencies when it comes to performance over space. When it comes to scale, Bitcoin can be divided up to 100 millionth of a Bitcoin, which is called the Satoshi. So this will allow that whenever one Bitcoin reaches the value of, say, $1 million, you would still be able to go to the store and buy your 30-cent pack of chewing gum with a small fraction of that Bitcoin. And as a small sidestep, for those of you that find the notion of Bitcoin being worth $1 million ridiculous, I would challenge you to place yourselves in the minds of the early adopters of Bitcoin that were actually trading Bitcoin for 1 cent a piece, less than a decade ago. And to them, the idea of Bitcoin being worth $8,690, which it is just before I walked on stage, might be just as ridiculous or even more ridiculous if you think about it, that this has all happened within a decade. But anyways, I said I promise not to do any price predictions here, so let's move on to the portability across time. Now this is where, in my opinion, Bitcoin falls short. Since the currency has shown to be so volatile that whenever you buy a pack of chewing gum in the barbershop, and you come, which was possible with the barbershop that I just showed you, you could actually buy chewing gum there. If you would come back the next day, you would pay a different amount in Bitcoin because the price would have gone up or down. And yeah, this week actually is a good example for that because we have had an extremely volatile week. Exactly 1 week ago, Bitcoin was worth $7,900. And, well, like I just said, just before I went on stage, it was worth $8,690, which, of course, is nice if you have invested in Bitcoin, but it makes it terrible as a payment method, because why would you spend a currency that has the potential to be 10% worth more the next day, and why would you accept a currency if it could well be that the next day that currency that you took in exchange for your products or services are worth 15% less? So this is actually where BitPay comes into play and a problem that we're solving, but still, Bitcoin as a payment method is failing at keeping a consistent value over time. Some people argue that Bitcoin price will stabilize over the years as more people use it, but the truth is that in the end, a fixed amount of Bitcoin will come into existence, and this will, in my idea, always cause an imbalance between supply and demand. So that's why I want to ask you the next question, this is the last question actually. Who of you have heard of Tether before? Okay, there is one hand here. 2, 3, okay. So, Tether is a so-called stablecoin, which is a cryptocurrency that is actually pegged to the US dollar or to any currency, or you can peg it to any currency on earth, and it will follow the price of that currency. So 1 Tether is 1 US dollar. And as a matter of fact, more Tether is exchanging hands every day than whatever cryptocurrency, even Bitcoin. More value is exchanged in this currency that only 3 people in this room have heard of. Now, why are you reading about Bitcoin? Why are you not reading about Tether? The reason for this is that stable is boring. You don't read on the front page of the newspaper that the prices of steel have stayed the same, or that the sales of shoelaces during 1 year have stayed the same. People only want to read about cryptocurrencies that are highly volatile, people make a lot of money with, or people lose a lot of money with. But I truly believe that this property of having a stable value is really the final puzzle piece that is needed in order to change and integrate cryptocurrencies into the lives of every one of us and actually be a really truthful, challenging technology towards the financial means that we have right now. And it's this reason why BitPay last month, well, it's not this reason, it's not because my opinion was this, but actually BitPay introduced last month 3 stablecoins on their acceptance side. So right now, if you have stablecoins, you are able to pay with them at merchants that have signed up with BitPay. But then again, as a merchant, you can also choose to get settled in these stablecoins. And this way, we're moving towards an ecosystem where actually banks are becoming unnecessary. Because even if you are a merchant and you have customers, but you don't have the means to get a bank account, you don't have to worry because you can take in your revenue in cryptocurrencies that is guaranteed to keep a stable price, and then again go to your suppliers and pay them in stablecoins again. So I'd like you to think about this and bring to the discussion that we're going to have after this presentation. I promised you that I would come back to the bike. If I can do a small analogy? Okay, very short. So I come from a country, the Netherlands, with 17 million people. And we have 23 million bikes. That's 1.4 bikes per inhabitant. And I grew up around bikes, on bikes. I know, I've seen my fair share of bikes. And the funny thing is with a bike, if you want to balance it, you should have the possibility to steer. If you would make a bike and you would fix the steering wheel, that it will not turn, you will not be able to balance that bike, you will fall off. And if you don't believe me, try it. Get your welding kit, fix your steer. Preferably don't do it in the street with a lot of expensive cars, but really, it's true, you cannot ride a bike where the steer is fixed. Now, for a person never having ridden a bike before, it would be logical to say, okay, I want to go from A to B. The most effective way, okay, let's just fix the steering wheel and go for it. But this is actually will result them to fall off the bike almost instantly. Whereas if you have the ability to steer, that's the only way to get from A to B. So this is the way I try to look at failing. It's not really something you want to avoid. Don't fix the steering wheel. But it's actually something to something that is necessary to get from A to B, while continuously balancing, adjusting your course, and keeping your goal in sight. And that's the last thing I want to share with you guys, and I'll give the stage back now.
Thank you very much, Max. I think while listening to your presentation, it was kind of very entertaining to remember the fact that crypto is extremely volatile, and you can burn as much as you can win sometimes, and also the fact or the lack thereof of a reliable source of information on crypto, because whenever you try looking for something on social media, on any platforms that are available, there's a lot of why Bitcoin is going to be worth 100 million in the next year, but you don't really get real analyses. I'm interested in how much, I'll twist the last part of it, because that was just a remark I wanted to make. But in terms of failure, could you name like 3 key learns that you took away from Bitstrat? Not necessarily 3, I just named a random number.
First of all, don't parade yourself too much whenever people start picking up on what you're doing, because it's not necessarily a measure for if your company is actually succeeding. 2 is find out who is your customer and what is their problem. Never assume that you have found the problem of your customer and you're gonna solve it, because in all the cases they don't even have that problem. And 3 would be iterate fast. So test an idea, try it out, see how people use it or how it works for them, learn from that, and use that again as input for your next step, just like riding a bike, actually.
But to an extent, probably then also, I'll come back to Facebook CEO Mark Zuckerberg, right, who said move fast and break things. And today we're having a conversation about privacy violations and all the kind of things like that. Do you say iterate fast, but do it in a controlled environment? Is that kind of the key takeaway?
No, that's not what I'm trying to say. And I want to challenge your example for Facebook, because I just talked about these banks, and these banks, they were too big to fail, and they were clearly doing stuff wrong. They were clearly breaking stuff, and it was the people that actually eventually had to pay for their mistakes. And the same is with Facebook. If you're a company with such a reach and such a skill, you actually, I believe, you have a certain responsibility towards the stuff that you're doing. And if you are 2 guys in a truck just figuring out what's the right business model, I would say, don't let anything or any thoughts of is this the right thing to do stand in your way, because at the end of the day, what's the worst that you can really evoke?
All right, so I'll just, I remembered a remark from Robin Williams, the comedian, who said, saying too big to fail is like saying too fat to die, right? Ladies and gentlemen, I will refer to you for questions now. Does anyone have any while listening to this interesting presentation by Max? Everybody is awestruck.
I see.
Please, ladies and gentlemen. There we go. We have a question over here.
Yes, you were talking about the free new coins that have stable value that you have just launched. Are they working in the similar manner as Tether? And I have a second question, and maybe a part of the second. So you say that you don't believe in banks. I wanted to ask you if you don't believe in the regulatory system as well. And how do you keep a stable value without a regulatory system or without banks?
Great questions.
Hardball.
Okay, so first one. The ones that we added are Gemini USD, Paxos, and USDC. And they basically work the same in the sense that the issuing party of these cryptocurrencies, they say that they hold like a reserve fund that backs these coins 1-to-1. So whenever they issue one coin, you can go back to them and say, hey, I want to change it back for $1 right now. And Then your second question was if I don't believe in regulations. I'm a strong believer in regulations. I think the whole crypto industry actually needs more regulations to actually make it take off and be used on a large global scale. Where I don't believe in is putting all this financial responsibility just in the hands of a couple of banks. But to answer your question, yeah, I am a fan of regulation. I think this industry needs more regulation in order to thrive. Then the third one is how do you ensure that the coins are always staying the same value? It's by keeping a reserve of that coins in a certain amount of money. Does that answer your question? I still see you thinking a little bit.
Probably
we can discuss over a beer.
A follow-up will be required after the event finishes. Ladies and gentlemen, further questions, please. Nope. Okay, well then, if there are no further questions, we'll thank Max one more time for an interesting presentation, and make sure you catch him at the networking event later on. Thank you very much. Now, ladies and gentlemen, this is actually the end of our speaker and official part of the event. I remember probably the very first conference I hosted was a university doing a kind of a TEDx conference back in the day. It's a very long time ago. And there was this Fulbright scholar that I met from the US, Professor Edward Kelly, who was speaking about a very, very good topic for today. It was called fear of failure. I think fear of failure discourages us, and I'm quoting him, discourages us from taking maybe sometimes risks, but sometimes taking even easy steps to try something new, to try a new venture, and probably even succeed at it. Fear of failure discourages us to do anything sometimes. We get paralyzed. And I think the fact that we have a collection of awesome people here spending the afternoon together, sharing failures and how you shouldn't be afraid of failure and stand up and fight further, right? In the words of Status Quo. But we have seen live examples on stage today that even after you fail, you stand up and fight and you deliver again and again and again. So I hope this serves as an encouragement for everybody in the FinTech industry today and for future generations as well. Don't worry, don't be reckless, obviously. Be smart about your decisions, but if you fail, don't forget that you are still capable of bouncing back. That's what I wanted to say. Thank you very much, ladies and gentlemen. It was a pleasure being with you today. And obviously, right now, we start off with our networking event. So please make sure you approach the speakers of today's presentations and ask them the question that you were a little too shy to ask in front of the audience while everybody was listening. And also, your one assignment for the entire networking event, shake as many hands as you can today. All right? And we'll see you soon. Thank you very much.